No one likes to talk about money, and especially when it comes to debt, people like to avoid the issue. But let's face it, most Americans today have some type of personal debt. That being said, over 12 million Americans get a payday loan each year, and millions of more have credit card debt. In fact, the average American family is $5,700 in debt. Many people are struggling with debt right now, especially with how the economy is and how finances are. So today we're going to take a look about payday loan, credit cards, and paying off your debt. Borrowing money can be our best or worst friend. That being said, when it comes to borrowing money, of course there's going to be pros and cons. Having some debt can actually improve our credit score, while having too much debt can hurt our credit score and lower our credit. Okay, so let's talk about debt traps. What is a debt trap? A debt trap is when a person continuously borrows money, thus increases the amount of debt they owe. A lot of times, buyers will only pay off the debt just to borrow more. Debt traps are common, but are very hard to break. They can happen in a few ways. What common denominator, the borrower racks up so much debt, they do not know how to pay it. And let's be honest, that's gonna be really stressful, and then they're gonna become and feeling hopeless. You may be wondering, what is an example of a debt trap? One example is credit cards. They're usually a very common way to continue to get into debt. Usually people fall into the debt by racking up their credit card debt and only paying the minimum. The credit card company might not seem upset or warn you that this is an issue if you only pay the minimum, because they are continuing to get paid. But so as long as you pay the minimum on time, your account will not be sent to collections. Meanwhile, your account could be racking up thousands of dollars in interest, and credit card debt rises extremely fast. You may be wondering, what is another debt trap? Well, payday loans can be a debt trap if when people go to payday lenders, to multiple lenders, continue to go to payday lenders. Each time they borrow money to pay off their last loan, this type of activity can actually snowball into a bigger debt issue. Each time they take out another loan and to pay the previous loan, they end up owing more, because you're only paying for one loan and then you have another loan on top of it. Debt traps are really hard to break. This often is because the person relies on their debt for their daily expenses. It's hard for them to use their money simultaneously cover their current expenses as well as paying down debt. Debt traps can seem easy to manage at first, but unfortunately, as they continue to grow, many people don't realize it's an issue until it's too late. Now, Emily, you may be wondering, how do I stay out of debt? So here's a few ways to stay out of debt. Payday loans honestly often have a really bad rep, but they're sometimes associated with debt traps. In many states, there's no law against how many different lenders a person can work with at once. Unfortunately, some people get payday loans just to pay off existing payday loans and so on and so forth. This is where you can rack up debt really, really quickly. That being said, the good news is that it is possible to get a payday loan without falling into debt trap. For starters, you would only apply for a loan for necessary costs, such as you would use it for an unexpected car expense, an unexpected home expense. To be completely honest, having a payday loan for that is a lot better than potentially losing your car or even your home. That being said, some people also use payday loans to avoid expensive bank fees or late fees instead of being charged you the $30 extra for overdraft fees. You can actually watch our other video that is about how to get your overdraft fee refunded. They also may choose to borrow $100 to make it through the end of the month. In exchange, they will likely pay less fees that the bank would charge them, only to use payday loans for important reasons. Another advice we have is to only work with one payday lender at a time. Although there's not usually laws on the number of lenders that you can work with at once, there are laws on the number of loans you can have out with one company. Avoiding other lenders will help you actually avoid getting a second payday loan. Only having one loan will keep you out of this debt trap. Plus, some payday lenders like NetPay Advance offer loyalty programs. At NetPay Advance, we actually have a VIP program for our customers with a solid repayment history. They can save money on future loans if they have previously borrowed with us. Let's be honest, debt traps can be super scary, and if you're in one, you might not know how to get out one. I really hope this video has helped and give you some light on how to avoid them, as well as how to maybe even get out of one. If you want more information on how you can get out of a debt trap, or even if you ever need a little payday loan for that unexpected expense, just give us a follow and go ahead and follow our link in our comments.